Hi everyone, thank you for watching my video. I'm Yodicha and this is on bank reconciliation, and this is a topic relevant to the students taking the FIA exams, particularly the FA2 exam. This video is to help improve understanding of this topic. Alright, anyway, what is a bank reconciliation? Basically, a bank reconciliation comes about for certain reasons. Let me explain to you the background. Basically, in the accounting system, there is the cash book, which is a book of prior entry. And this cash book records all collections and payments within, the business, whether these payments and collections are in the form of cash, whether these are done through the bank accounts, right? For our purpose, you are more interested in those that go through the bank account rather than those that are in the form of cash, right? Those are not too relevant for our purpose of discussion in this video. The bank statement is a record of all deposits and withdrawals within an account maintained with the bank. Now, and this record is obviously prepared and maintained by the bank. And this record is typically provided, on monthly basis. You get this once a month, usually at month end. So as such, you may from time to time have differences between the cash flow and bank statement due to timing. Now, how does this timing actually occur? Let me explain. For example, check payment. Right, the check payment to supplier will be recorded at the date of issue. So for example, you may issue the check today, and it's recorded in your cash book today, but you cannot tell when the supplier will deposit the check at the bank. So long as it does not deposit the check at the bank, the check will remain unpresented, and therefore it will never appear in the bank statement. So which means that only when he deposits the check, then it will appear in the bank statement, right? So if it doesn't appear in the bank statement, and if you have such a payment recorded in your cash book, obviously your cash book and bank statement would have different balances. Another problem is checks received from customers. You may have received the check from the customer today, but it is not necessarily true that you will deposit the check on the same day for various reasons. For example, you might not deposit the check today because it's a public holiday. So therefore, you might have the check on hand and recorded in your cash book, but yet at the same time, the bank has no record that you have received such a check payment from the customer. Now, this check is therefore known as an uncredited lodgement or uncredited deposit, right? So that's what gives rise to what I call timing difference. In many cases, transactions may also occur in an account with the bank, but will not be known to the account holder until month end when the bank statement is made available. For example, bank interest income, bank interest expense, bank charges. These will obviously not be known to you, and obviously will not be known to you and will not be recorded in the cash book. And you won't know until you receive the bank statement. Let's put it simply, the bank is unlikely to call you and tell you that, sir, you're going to receive bank interest income of $1 or $2. It's unlikely that will happen. So why? Because there will be many bank account holders that have bank interest going to them. So the bank will not make, it's unlikely to make such an attempt and effort to call and update the account holder that there is interest incoming, right? So in this situation, these will not appear in the cash book, but will surely appear in the bank statement. They will surely be recorded in the bank statement, but not reflected in the cash book. Okay, moving on. So therefore, there are two categories of items that you have seen, right? The two categories of items are, number one, those that are not reflected in the cash book, but they are reflected in the bank statement. And they could be things such as bank charges, dishonored check, interest income, interest expense, dividend income, credit transfer, direct debit, standing order, bank errors, yes, bank errors. And if you identify these type of examples, chances are these will have to be reflected in the cash book. Now, how would you reflect in the cash book? For example, if it's a bank charge, obviously this represents a deduction to your cash balance. If it's a dishonored check, that also represents a deduction. So I indicated the sign so that it's easy for you to remember, right? And then, however, if let's say there is interest income not shown in your cash book, what do? It is an addition in your cash book, right? Okay, and then interest expense, which is a deduction from the cash book, dividend income, which is an addition, credit transfer, and so on, right? Now, that is the first category of items. The second category of items are those which appear in the cash book, but they are not in the bank statement. What are these? These will be like what I told you earlier on, the items that do not appear, in the bank statement because of this problem of timing. Like for example, unpresented check, uncredited check, for example, uncredited check deposit or lodgements. So then what you need to do is that you need to make sure that these are reflected in your bank reconciliation statement, right? So the important technique here is to identify in the question which item is it. Are these items that fall under category 1 or category 2? That's very important to confirm. Okay, let's use the table that I've demonstrated to you earlier on, that summary table, and use that to demonstrate how do you use that information to solve a very simple question like example 1. So say for instance, ABC Private Limited had $300 of debit balance in its cash and bank account, and it discovered the following items that gave rise to the differences between balance in the cash and bank account and the bank statement. So what are these? If you recall, what are these? These are items that will need to be reflected in the where is it? Yes, bank reconciliation statement. Alright, hold on. So okay, so let's come back to where we were. So then the unpresented check and the uncredited lodgement. Right, if you remember my summary earlier on, right, you can review, you can rewind the video just to see that summary table. Right, so this is supposed to appear the bank rec statement. So how do we use the information here and to calculate, in this case, the balance in the bank statement at 31st December 20x8? Obviously, this requires you to prepare the bank rec statement. And thankfully for the FIA exams, it's multiple choice based, so there is no need to prepare a bank rec statement. You just have to know what are the additions and subtractions. Okay, let me just give you a working to solve this. Now, if you prefer, then you can go through this very simple working to arrive at the balance in the bank statement. There are quite a number of ways to do this. I'm showing one of those ways. Right, as you can see, I'm not following the bank rec statement format, but if you wish to, you may follow that. So I'm just taking the simpler way to do this. So let's begin with, okay, we are trying to find the bank statement balance. Okay, so we want to start with what we have. So what do we have here? Debit balance in cash at bank. So then we have a debit balance cash at bank. So the amount is 300. Now the next step. So we have unpresented check. So the unpresented check have to be added. Okay, has to be added, and that gives you how much is that? 200. And then 3 is that we need the minus of uncredited lodgements. Which comes out to be 250. So the final amount, which is the credit balance, okay, you end up with a balance, bank statement. Now, how much would that be? The bank statement balance comes out to be 250. How do you get that? 300 plus 500 minus 250. That gives you 250. Now, how do you know if this is credit or debit balance? Now, it's very simple. If you find that this is a positive balance, there is no minus, then therefore the balance in the bank statement should be the credit balance. In many situations, these two are opposites in many cases, but you know what? They are not always opposite. Just be very careful when you do this. Right? They are not always opposites. And that's it. Now, if you prefer, there are some other ways about it, right? Which I'm not going to run you through that because if you're very interested, you can drop me a mail to ask me like what other ways you can use to find the same answer. Okay, but some students, they tell me that they could get the same answer by not writing these. Yes, you can. After all, I told you it is a multiple choice based exam, so the main thing is that make sure you know your addition and subtraction. Okay, good. So that's example 1, and your answer for this case is 250. Very good. Let's move on. At 31st December 20x8, ABC Private Limited had $300 of balance in its cash at bank. Now beware. Now this example is a bit different because you now start with the debit balance in the cash at bank, and they discovered that there are some different figures that were in the bank statement but not in the cash book. They include bank charges and interest income. So your task is to find out what is the updated cash at bank account, right? So how do you do that? Now there are a few ways to do it. Now one of the simplest way is just to do addition subtraction. The other way is to draw up the T account, but I suggest that you do not waste time drawing the T account because in the FIA exams for FA2 there is very limited time for you to draw a T account, so it's wiser to just use addition and subtraction to get your answer. So what do you do? Very simple. Start with the cash at bank, 300. So bank charges, as I've shown you in the summary, is a deduction. So what we do is that we just minus our bank charges for 30. Interest income is an addition. So what we do is that we just add the interest income for 40. So that will result in your updated balance of 200. Sorry, apologies for that. Okay, 300 minus 30, then plus 40, that gives you $310. Right, so that is the updated balance. Not too bad, right? And that is your answer, right? Very straightforward. Right, so finally, a very important few pointers, that is, be very mindful that a debit balance in the cash at bank and bank statement, they have different meanings. A debit balance in cash at bank is a positive balance, whereas a debit balance in the bank statement is a negative balance, and a negative balance is also known as an overdraft. Beware. Credit balance, on the other hand, okay, if you look at the cash book, negative balance means credit balance, whereas the bank statement, credit balance means positive balance. Be aware of that. This is usually a confusing area for many students doing it for the first time. Alright, so I'm at the end of the video, and you know what, if you have questions on this, right, feel free to email me, right, at wildy231@gmail.com. So this is a very quick summary on the topic. I hope that you could practice more of the revision kit questions. That would further improve your confidence in this. This is really a topic where you can do well with enough practice. Alright, thank you, and I look forward to hearing from you, and all the best for your exams. Thank you.